What's going on, guys? It's your favorite mortgage lender, Abdel Khawatmi. Great news this morning. CPI reports came out. Actually, inflation slowed down. Still remained a little high, but the annual inflation is actually now at 7.7%. It's down from what it was last month at just over 8.2%. Now, the core rate actually for volatile food and energy sectors is up 6.3%. It's still lower than it was last month at 6.6%. Still the highest it was since the 80s in August. But again, remember, the average economist actually expected that we were going to be at 8% with 6.5%. So we're on a great positive note. You know, these declines, although they're pretty small, we're not going to really see them on our day-to-day. But we got to think big picture, right? Overall inflation fight, we're starting to see a decline, which hopefully means that the worst is over. Now, we're going to see in the data within the next couple months, hopefully we'll start seeing that prices are going to potentially stabilize and start focusing on the economy. We're going to really monitor the unemployment and the labor market because that's starting to cool down. The Federal Reserve obviously hopefully plans to slow down their pace as early as next month. Now, what we're going to see is the Fed's job is definitely, they still have a long way to go. Inflation, they want to hit that goal of 2%. We're at 6.6%. So Americans, you really should prepare, guys. We're going to expect the Fed to, again, increase that short-term benchmark rate into next year likely. We are going to see a slowdown, though. We expect them to only raise it by 50 basis points, half a percentage, as opposed to what we've been seeing, 75 basis points, which they did about 4 times. Now, remember, guys, these rate increases, although they're going to come slower, it's still going to be higher than we previously expected. So we saw 6 rate hikes this year, and the Fed wants to target that Fed funds rate between 3.75 to 4% when it was really near zero at the start of the year. So again, great report that came out with the CPI reports. Finally, some good news that we're starting to see a slowdown in terms of inflation. Again, guys, remember, this is based off of a 12-month report. We're going to start seeing that transition from last year into this year when really the market started to turn really around November, December, when the Fed announced that they were going to start tapering rates and slow down the buybacks of bonds and treasury yields. So I'll keep you guys updated. Again, we got some great news. Hopefully we'll see how the market reacts to this. We'll find out how stocks, crypto is obviously starting to get a huge hit. I think I was reading an article the other day. The government wants to potentially come out with a digital currency, a federal digital currency, which kind of defeats the purpose in my eyes in terms of where it's supposed to be regulated. But again, guys, we'll keep an eye out. Great news for inflation, great news on the CPI reports. We'll see how the market reacts to that, and hopefully we'll start getting some stability in terms of wealth. All right, guys. Thanks, guys. Abdel Khawatmi, Paramount Residential Mortgage Group. I'll talk to you guys soon. Have a wonderful day.